Ladies and gentlemen, welcome to this session. My name is Patrick Wandera. I'll be the moderator of today. And today's topic is what is life insurance? And today we have 4 panelists. First one is Mr. Sidin Davis. Next one is Mr. Mike Mukasa. The third one is Mrs. Zahara Sayed. And the fourth one is Mr. Don Fran. So, panelists, you are welcome. And today we're gonna start with Mr. Dan, and Mr. Dan is gonna talk to us about what is life insurance. Oh, he's gonna explain, he's gonna introduce himself. Then the next panelists will also introduce themselves, the third wheel and the fourth wheel. Then from there, we shall go to the next session. So, Dan, you're welcome.
Thank you, Patrick. I just want to say thank you for everybody who's online today. It's my pleasure to come and help you better understand how life insurance can benefit your family. Again, my name is Don Fruin. I have been an insurance agent in Texas for 20 years. And I just really enjoy working with people, trying to help them put together an insurance plan that will protect their families for whenever bad things happen in that family. We can make sure that finances is not one of those things that's going to upset the family.
Okay, thank you very much, Dan. Next one, we shall have Mrs. Zahara Sayed.
All right. Hi, guys. It's a pleasure talking to the Ugandan community today. Definitely a privilege to give you guys some information. My name, again, is Zara Syed. I'm Vice President with Primerica. And I actually have been in the industry for almost 8 years. I used to be a teacher, and the company actually helped me out. And that's kind of, when I fell in love with the principles of good, wholesome financial principles and being able to help middle-income families and really help make a difference for them. So for the last 8 years, this is something that I've fallen in love with. So I hope I can able to kind of answer some questions that you may have as far as protecting your family and making sure you guys are on track for your goals and dreams.
Thank you very much, Mrs. Sayed. The next one is Mr. Mike Mukasa.
Thank you so much, Mr. Moderator, Mr. Patrick. I am honored and privileged to be on this panel with such an experienced people in life insurance career. My name is Mike Mukasa. I'm a U.S. Navy veteran, and I'm also a community leader here in Texas, in Houston. I'm a UNA representative for Southwest Region 1. So I represent my community to the UNA organization, which is an umbrella of all the Ugandans, North America and Canada. I'm also a licensed insurance professional. I've been having my license for the past 2.5 years. And the reason as why I got the license was because when I became a client with Miss Sayed Zahara with Primerica, I realized that there was so much knowledge I would give out to my people, but I didn't want to refer people when I don't know the knowledge. So I had to go and study myself and go the certification and the license so that I can also practice. But mostly my desire is to see that we enroll as many people in our community as we can. I always tell my people they don't have to enroll with Primerica. They can have a choice of whatever insurance company they want to work with, but as long as you have them enrolled, because as a community leader with Mr. Patrick and the other panelists who are not talking today, when we get like certainties in our community like this, it's us the leaders whom they run to start organizing funds, maybe to take the body back home or to cater for medical bills. So I thought, and I said, hold on, how about if we encourage our people to get life insurance, and other than waiting to solicit money to help out these people, these families? So that's why I became a licensed professional, and I'm very grateful for all the panelists who have turned up today, because whatever knowledge you are going to give out is going to be very helpful and beneficial to my community. So thank you so very much. I render to you back, Mr. Moderator.
Thank you very much, Mike. Next person will be Mr. Sidney Davis.
Okay, thank you, Patrick. And Sidney Davis III, and I've been licensed to sell insurance since 2000, early 2000, and just you know, help the community, help families get coverage for whatever their needs may be. You know, for the children, for college, whatever it may be, but. And that's basically it. Thank you for having me on the call.
Thanks very much, Mr. Sidney Davis. Next, we're going to start the real topic. And I'll turn to, can you hear me?
Yes.
Hello? Can you hear
Yes,
me? Okay.
we can hear you.
Okay, next, I'll turn to Madam Zahra Sayed. What is life insurance?
Now, really the concept of life insurance is to make sure that that family has, you know, whenever you think about insurance, insurance protects risk, right? So even if you're thinking about auto insurance or home insurance, the purpose of it is to make sure that that family can be able to cover themselves in case an emergency happens. So for example, you know, the reason why people should protect their family for life insurance is not just because we're looking to have burial life insurance. That's not the purpose. The purpose is, you know, you're replacing an income, you're replacing a breadwinner, and you're replacing a family for loss of income, right? So you can't obviously ever replace a loved one, but the purpose of life insurance is really to make sure that that family can continue to live the lifestyle that they're used to having without necessarily having to, you know, do bake sales, collection, you know, collect money from churches and family members in order to survive, you know, and that's really, you know, usually life insurance really shouldn't cost more than a cell phone bill payment. It's just making sure that your family has that right protection so you can obviously invest, save for the future, and make sure your family is self-insured.
Thank you. Thank you very much, Mrs. Zahara. Any additions? Okay, next I'll go to Mr. Mike Mukasa. What is life insurance?
As Mr. Said explained, life insurance is a policy, it's a contract that the insurance company gives to the policy owner in exchange of maybe can be premiums. So the insurance company provides a lump sum amount, the insurer gives a lump sum, and so that at the time of death, a beneficiary upon the insured's death gets a compensation. So pretty much there is a contract between the person who's going to be insured and the insurance company. And the contract at the end of the contract says, in case of death, the insured, the person that is being insured, his family member, whoever is involved as is mentioned as a beneficiary, will receive a compensation. So that the contract has been fulfilled.
Okay, thanks very much, Mr. Sidney Davis. Any additions? Mr. Sidney Davis?
Oh, okay, you said any additions to that?
Yeah, yes, sir.
Well, I think I think he's on point with that, but of course there's a large variety of different options you have for life insurance, and I think we're going to touch on a few of them. But yeah, it's the contract for coverage in time of need for the family and other different options that they may have or be looking for. So,
Okay. How about Mr. Dan? Any additions?
In addition to what everybody else has been talking about, life insurance also can protect you when you have a business, so that if you have a partnership or if you are the owner of a business, just because you pass, that business doesn't necessarily go away, nor do all of its bills, responsibilities, or contracts that they're involved in. So you can use a life insurance policy there to go ahead and pay off those debts that are incurred from your business as well.
Okay. All right. Next, we're going to talk about different kinds of insurance. And the first person will be Mr. Dan. What is term life?
Most people refer to it as permanent insurance or whole life insurance. This is a policy that you buy when you first get started doing life insurance. It's a policy that if you start when you are young, 25 or 30, the premiums are extremely low. The amount that you can get insurance for never changes the whole time that you have that policy, nor does the premium ever change. The policy never cancels unless you don't pay the premium. So as the name insinuates, it is a whole life policy. It also has built into it what's called cash value. Cash value is a portion of each premium that gets set aside in an account that the insurance company pays you interest on, and so that it continues to grow. Now that money that's in there, you can actually borrow out of that policy if you have an emergency. Let's say, for instance, you absolutely have to get a new engine in your car, or some other medical emergency that you need a couple $1,000s for. It's way cheaper than sticking it on a plastic credit card, and you can get your money from the insurance company in a matter of days usually. And then the companies will also then work out a plan to where you will repay that loan, so that it adds its full value back into your life insurance policy. Permanent life insurance is what I consider to be the foundation of any good insurance program, like the foundation on your house. If you have a bad, shaky foundation, your house is in trouble. And I believe that life insurance plans need to have that solid foundation of a whole life plan.
Okay. Thanks very much. Next, we're going to go to Zahara Said. What is investment in life insurance?
So the purpose of life insurance is really to protect that family, and it's to protect an estate. You know, like Don was saying, you know, sometimes people have emergencies and they have things that happen in their portfolio where they're going to need that money immediately. Now, typically what I recommend to a family is to have emergency savings set aside. You know, typically what we set aside is about 3 to 6 months of someone's living expenses. So that way, if they lose their job, or, you know, they do have that engine fail out, or a car, you know, get, you know, in trouble where, as far as you need money immediately, you definitely don't want to necessarily have something where the insurance company is going to charge you an interest rate, or, you know, potentially on your own money. So what I teach my clients is that you want to have investments outside. Life insurance, the purpose is not, for example, an investment. You know, for example, to be fully securities licensed and to be named as an investment advisor, you have to be able to set up accounts where someone can have interest rates or interest-bearing vehicles, such as, you know, things like stocks or mutual funds or investment accounts that allow that client to save for college or save for those emergencies or save for those midterm needs versus saving inside of a policy. Because what I've seen is it's a lot cheaper to lock in price for a term. For example, I got my policy when I was 23 years old. Now, 8 years later, I'm still paying as a 23-year-old. And what's awesome is I don't have to worry about my premium going up. And, you know, necessarily if my health, let's say, suffers next year, I still will be paying as a 23-year-old for the next 35 years. And so what I'm able to do is with those savings, I'm able to invest it and put into a growth mutual fund or investment bearing vehicle, which has tax-free or tax-deferred benefits, and really allow my money to grow while making, you know, upwards of 9 to 12%, depending on which mutual fund or investment you're looking at.
Thanks very much, Madam. Next is Mr. Mike Mukasa. What is term life insurance?
Thank you so much, Mr. Moderator, Mr. Patrick. Term life insurance is a set of insurance that lasts for a set of number of years. Let me say, term life insurance lasts for a number of years. If you die before the term is up, a certain amount of money, which is referred to as a death benefit, is paid to the beneficiary. Term life is considered to be simple because sometimes it's kind of accessible. And also, as you are paying your premiums every month, you are paying for your death benefit. So in case you don't pay your premiums, then you are not paying for your death benefit. In such a way, your insurance may elapse. So it's always very good to know which kind of insurance you want to get and also how many terms you want to get. For example, you may say, I want to get term life insurance for maybe 10 years. And let's assume you are 30 today. After 40 years, you are going, after 30 years, 30 plus 10, you're going to be 40. If you apply for a new policy at 40 years, the premiums are going to be higher. So it's always advisable, and we tell people to get insurance when they are still younger, and also to consider how many months they are being insured, because that will affect them in the future. Thank you.
Thanks very much, Mr. Mike Mukasa. Next is Mr. Sidney Davis. What is universal life insurance?
Universal life insurance. Let me see. Universal. I really don't ever use universal life insurance, but universal life insurance is sort of investment type insurance where, let's see, I want to give you specifics, but I generally use index universal life, but universal, it has the probability of losses or what have you. So it's sort of an insurance that's going to give you a type of investment value. So, and it varies depending upon which company you go with. So, and I do think they do have some guaranteed universal policy. So, but it has an investment component towards it. But if somebody else wants to expound more on it, I like index universal life, but not just universal. I haven't been attracted to use that one.
Okay. Thank you
Yeah,
very
I
much.
can jump in a real quick, just a few seconds. Universal life insurance has a cash value, just like whole life insurance policy. Your premiums go both to the cash value and the death benefit. That's what I wanted to, to point out.
Yeah, typically how it works is as someone's cost of insurance rises, meaning, as you get older in age, basically what happens is the insurance company starts charging you more. Now the client's still paying the same premium, but where they're taking that difference out, like Mike was saying, is their cash value account. So typically, you never want to go to a bank and find out they're taking money out of your account. So that's why, Sydney probably doesn't do a whole lot of those.
Okay. Mr. Dan, in addition?
Well, the basic format, as they were saying, is universal life is a term life insurance policy that's referred to as annual renewable term. So that the cost of your insurance goes up every year on the anniversary of the policy because you are a year older. And as they were stating, every month when you make your payment, a portion of that goes to pay the insurance, a portion of it goes to pay an administrative fee, and then the rest of it goes into an interest or finance bearing account. As you get older, there's more money of that premium that's going into cost of the insurance. And eventually you will be at a point where the premium that you're paying doesn't cover the cost of the insurance and the administrative fees. And at that point, the insurance company will begin to take monies out of your savings side of that policy to be able to make up and pay the difference on those premiums. Most life insurance companies pay you either a guaranteed amount of interest, or in the case of what Sydney was talking about, they have an investment that's tied to an index like the stock market or the S&P 500, and they deposit interest into your account based on those growth funds. Universal life is something that you really need to work with your professional on a very regular basis, because if the stock markets or whatever market you're invested in should happen to go south, you can damage your investment really quickly. So you need to stay in touch with your professional on a regular basis, and as necessary, make adjustments that you can make to keep that policy safe and solid.
Thanks very much. Another question. What are the cost differences in term life, universal life, and whole life? First, I'll go to Mr. Mike Mukasa. Mike?
Moderator, you say the cost differences?
Yes, sir.
You can't determine the cost differences. All those costs depend on the age, the age and the type of policy you want to get. But mostly the cost for any insurance policy depends on the age. If a person is 18 and I am 35 and we're buying the same policy, the cost is going to be different because he's younger. He doesn't have so many risks. Now, if a person is 60 and I'm 35, I'm going to be paying less than him because at that age, is risky, is considered to be risky. So you can't say the cost of different policies, but what determines the cost? It's the age mostly that determines how much you're going to be paying for the premiums. Also, if they do a medical examination, the results of your medical examination, depending on the medical report, determines how much you're going to pay. Some insurance companies may even deny you an insurance because you are risky. That's how I can respond to that, Mr. Moderator.
I can
Miss-
also jump in.
Go ahead.
Sorry. I was just gonna say, you also want to look at like, for example, what product they're looking at, because for example, like typically when you're looking at like term and you lock it in for a level term, that can be actually locked in based on the term that you initially do. Now, I know Don was mentioning that annual renewable term. So that one, basically the price would change every year. But if you're doing like a level term, let's say for 20 years, and you're locking in that price would typically, they say, is 5 to 10 times cheaper than, like, for example, you mentioned universal life insurance. Now, it's basically whether someone's a male, a female, they look at mortality tables, they look at, of course, health. So that's kind of what Mike was mentioning, is they look at, of course, making sure that that person is healthy and they want to take on that risk of insuring that person's life.
Thank you very much. Mr. Dan, in addition?
If you're going to sit down at the same age and the same face amount, that's the amount of life insurance that the person is purchasing. When you start from whatever age, whole life insurance is going to cost a little more than term insurance. The basic difference is that whole life stays the same until age 126. At that time, it's a fully paid up policy and you can have the face amount of the policy. Term insurance, at the end of that 10 or 20 or 30-year period, it goes away. And if you want to renew it, you are now paying the premium at whatever age you are. So if you took a 20-year term out at 45, at 65, if you want to continue that policy, you're going to now start paying the premium of a 65-year-old. And that premium as a 65-year-old will probably be bigger than the amount of the whole life was at the age of 45 for the same amount. The second thing is, not all policies of term insurance are guaranteed renewable. So if during that 10 or 20 or 30-year period, you develop an illness that makes you uninsurable, at the end of that term, you will not be able to buy an additional amount of life insurance. So you're going to be basically running with no life insurance and no prospect of being able to buy any more. So there is a place for term insurance. There is a big need for term insurance to cover specific parts of your plan. So, but if you're talking about straight costs, if you're talking initial out-of-pocket first-year expense, term insurance is the least expensive.
Okay, that's right. Sydney, in addition, Mr. Sydney.
Relating to the cost of insurance, yeah, they hit it. They're right on it. I mean, yeah, it varies when you get it. It varies who's getting it, male or female, what his or her health is, and then that all coincides with what the individual wants to use the policy to do. What, because you have various options. So, yeah.
Okay.
But term is generally going to be cheaper depending on, when the person is getting it. Older person is not going to be likely to get a good term policy. So they may have to look at other options. But in terms of, below 60, the term could be less expensive. And it depends, because I've had clients where the term, once they cross over 50, it's going to be, not too far off from where a whole life policy would be. But the whole life, as Don said, whole life is going to be for the whole of the life versus the term for a certain period of time. And then it may not be renewable. It may not have a guaranteed renewable clause on it. So it just depends where we find the client and getting the insurance.
Okay. Now, the question is: are the proceeds usually income tax free? Mr. Sini, you can answer that.
Say it again.
Are the benefits usually income tax free?
Yeah, for an insurance policy. Yeah.
Okay. Next question. When you want to buy life insurance, is it only those people who have a social security, or anyone can buy life insurance?
Anyone can, well, I'll just say my first piece, but yeah, it depends on the company. Some companies want a social security number, some companies don't require it. So that just depends on, that's going to depend on the company that an agent is able to put you with as it relates to social security number.
The other option is a permanent resident green card. You can get the number off of that green card in lieu of a social security number, and a number of insurance companies will allow that as well.
Ms. Zahara, in addition?
Yeah, no, I mean, what they both said is correct. You want to be able to, you know, of course, have that insurance coverage. Just make sure that you're also getting to a point where you can, I mean, for someone that doesn't have a social security, I've seen companies use an ITN number, like Don was saying, you can use a green card. Just kind of depends if they filed taxes before. And it also, like Sydney was saying, it depends on the company. But that, yeah, pretty much answers the question.
Okay. Next question. If I'm here, I buy insurance, I travel and go overseas, and something happens to me, will the insurance company pay?
Short answer is yes.
Yes, most companies, depends, of course, on each company, but most companies that are pretty, you know, as far as major life insurance companies will pay that out.
The only caveat to that is you can't be in the military. If you're over there as a military representative in a war zone, you can void your insurance policies that way.
Yeah, and it depends also if they have an active war clause. A lot of life
Yes.
insurance companies have that active war clause. However, for example, when I started working with Primerica, one of the first things that we did was make sure that we get rid of that active war clause because of things like September 11th and things like that. So we were able to still pay out.
Next question. Some people do not want to take examinations because they are buying life insurance. Are there some companies that do not require examinations?
It depends upon which policy they are getting. There are some policies that you will not be required to do a medical exam. And there are policies where you'll be required, it's mandatory for you to do a medical examination.
Yeah, Mike's right. It's basically depending on the coverage that you get.
A lot of the insurance companies will check things like your driver's license. They will check what is called the MIB, which is the Master Insurance Bureau. It's a big computer, and they can look back through there and see what medical history you have. They will also contact your primary care physician and specialist to see what you may have been treated for there. And they can also access something called Script Check, which tells them all the medications that you purchased in the pharmacy. And then they will use those things to determine your risk or not risk to them. There are some companies out there that I'm sure you've seen them on the TV, where they advertise that you can buy a certain amount of insurance for guaranteed issue. Those are usually smaller policies that in the business are referred to as a final expense policy. Usually the maximum is about $30,000, and you can't own more than $30,000, even if you have it with a number of different companies. So that is the maximum you would ever be able to get. Those are usually also more expensive. And if you can qualify for a policy, I would much rather have you go ahead and get into a standard policy than to worry about those high risk ones if at all possible.
Just a little nugget to that. So yeah, there are policies you can get without the medical check, and then they'll just do like, what was that? Don was saying, check the MIB, and then insurance companies have, there are a couple other options. They have where they'll do disqualification based on a questionnaire. So if you can answer yay or nay to certain questions, they're going to base their opinion on whether coverage is going to be permissible or not. And there's a company I'm contracted with that will give a customer the option to answer virtually no questions, but they'll set you up with a contract that's similar to, like you were saying, a final expense type contract, but they're giving you a certain amount of coverage percentage on top of whatever your monthly payment may be. So you may get, let's say, anywhere from 10 to 40% interest on the money that you've put into the policy, into the coverage. So after a certain period of time, you may have a paid up period of 10 years, but it's not going to be a big policy. But that way you don't have to worry about, because I've had a couple of clients who don't want, they've taken a lot of medications and they don't want to, really expose all that information to anyone. And so they opted to go with that lesser policy, like a $10,000 policy. They're paying over 10 years, and the company is going to give them upwards of 30+% interest on the money that they've contributed to the policy. So.
Thank you very much, Mr. Sidney. Now, regarding the cost, if someone does an examination and someone does not do an examination, which one's more expensive? Does it matter?
Yes, it matters. Go ahead, Zara. I know you want to answer. Yes, it matters. It does matter.
Yeah, you could tell. No, but you got it. Yes, it matters.
So which one's more expensive? I guess the one with no examination.
With no examination, you may get one that's, like I said, they'll give a questionnaire. And so the questions they have, these contracts set up where, the application set up where they're qualifying or disqualifying questions. So depending on what your answers are to the questions, they'll pretty much determine whether or not, and with some other things, they may check the MIB, they may check with your local physician to see what's been going on, check, what type of medications you've been taking. But usually it's going to be more expensive to not do the physical or the medical check.
All these things are falling into what is referred to as underwriting. There are people in each company who decide the risk of whether they should take somebody as a client or not. And every company out there has their own specific criteria for what they will consider as a risk or not. I have one company that just absolutely refuses to take anybody who is on dialysis. I'm sorry, not dialysis, insulin for diabetes. I have another company that as long as your diabetes has been under control for 2 years, they take you, but they don't even rate your premium. So it's all over the board when it comes to insurance companies accepting the client, and it's all based on the insurance company's determination of what they want to be risked or not risked. That's why most insurance professionals sell for more than one company. because we get trained by those companies and we know which companies and their specific requirements for the people that they will insure.
All right, next is, go ahead. Mr. Mike Mukasa, I have a question for you. What's the difference between individual life insurance and group life insurance?
As you said it right away, individual or what we call private life insurance is like private policies that I may get for my family. A group life insurance policy is the one that sometimes people get at their workplaces, or for example, as our community here in Houston, we can have our own group policy. So a group policy, you get a number of people, it has a minimum number of people, and then you come together and then you apply for a policy. And then the insurance company checks you out and then it can approve you or deny you. A private or individual policy is the policy that a person gets on his own. For example, which one, like the one I can get for my family.
Yeah. And I was going to add on to that is just basically, you know, for example, whenever you work at a job or an employer, typically they'll offer that benefit. But let's say, for example, you stop working at that employer, most of them are not necessarily transferable. And if they are, they don't necessarily convert at the rate from the group that, you know, with your group or your previous employer. They actually convert at that age or at that rate that you're now deemed based on the insurance company after going through underwriting. So you want to make sure, I personally always suggest my clients, you want to own your own policy. That way you're not actually at the, you know, at the hands or at the risk of, you know, someone saying tomorrow, hey, well, we don't want to offer this coverage anymore to you. And then you're out of life insurance, you know. And sometimes what happens is people, they're employed through their employer, but like Corona, for example, is a great example of this. When a lot of people got furloughed and they lost work, they actually lost some of those benefits from being an active employee. And so what happened is when that, you know, they changed their status from active to like maybe a part-time or even in furlough, what happened was a lot of them lost their benefits. And so now, let's say heaven forbid something happened, that group insurance is not necessarily entitled to pay. They can make changes whenever they want because it's not you that's paying for that, it's the company's benefit. So we always suggest, I mean, at least I can speak for myself and my companies, we always suggest that you should have something that you personally own, and definitely make sure that is there for your family no matter what.
And also to add on that a little bit, Mr. Moderator, that's one of the things that took me to get licensed. And in fact, when I got my license, I found out that people in my community, some of them were in the medical field, they had group insurance from their places of work. So I was like, hey, you need to get a personal insurance because guess what? Those policies are not, some of them are non-transferable. And this is what I always tell, and I want to mention it right here, and I want the community members to know. Get time and view your policy, even if it's a group policy. Get a specialist. We are here. There's Mr. Sidney, there's Mr. Don, there's Zahra. Let somebody see your policy, if it is transferable or not. And also, some of our people are caught at certain jobs and they don't want to leave because they have insurance out there. But they don't know actually that having your private or your personal policy is better than the group policy. I wanted to bring that one up. Thank you.
Mr. Patrick,
Mr. Dan?
there's your questions on the chat.
Okay. Say it, Mr. Carter.
There are questions on that.
Oh, Miss Zahra has been answering those questions in the chat. She mentioned it.
There's one question I think that is basically they want to know if, I think we just answered it, the group life, but can a policy be put on hold in case of non-payment Yes, you typically do have grace period, and I know a lot of companies did that for during the coronavirus, but I'm sure Dawn and Sydney can also pitch in as far as like what they know.
Yes, some companies have in this situation gone into a situation where they will waive the premiums. The other thing that will happen is that most companies will let you reinstate a policy up to about a year. You just have to pay the back premiums, and that policy then goes back into full force so that you can do it. My suggestion with that is to look at it very carefully, because if your health is still good, the change in age by 1 year may not be worth buying that old policy back, but to go ahead and start a new one, because you will have a smaller out-of-pocket expense. Instead of having to pay 12 months premium, you start paying just 1 month again as you go along.
Another question on chat?
I think they're asking, is universal life insurance a form of whole life insurance, or are they two different types of insurance? Typically, there's policies that have cash value, and then there's policies, which is just insurance like term, which the definition of term is pure protection, right? So you can definitely, see that there's anything that has a cash value component or a savings component usually is determined like cash value policies. And then, what I usually suggest to my clients is once you have locked in that level term, like Dawn was mentioning earlier, at 65, maybe a client, their health has changed. They don't want to necessarily have to worry about renewals. But if for 20 years they've also been investing, they're not in a position where they necessarily need that life insurance anymore because they're self-insured. If I, why would I pay for maybe a policy for $500,000, let's say, if I have the $500,000 in my savings account, right? So that's kind of, going back to philosophies, but I'm sure the guys could pitch in as far as what they think.
One of the basic things I think people need to understand is that life insurance basically comes in two forms. It is either a whole life or it is a term. And all the other policies that you've ever heard of, universal life, paid up at age 65, final expense, all these other types of policies are basically just a change in those policies, in most cases, just a name change. It's kind of the difference when you go out and buy a car, a Chevrolet Impala. That Chevrolet Impala is basically the same car until you start putting all the options on it. And at some point, it will look different because of the color and the chrome and the whatever else you did. But at the heart of it, it's still a Chevy Impala.
Okay, I have a question here. Okay, when you buy term life insurance, and I'll give an example, maybe you're 40 years old and they tell you that you're buying a 20-year term or 15-year term. What happens after the term?
So,
will I pay the same amount as I used to, or the payments are gonna go up?
So it's basically like, when you're talking about any product that you own, whether it's car insurance, auto insurance, investments, you have to know how they work long-term for your financial strategy. What's the goal, right? So if the goal is to become self-insured and the goal is to not necessarily depend on the insurance company forever, I mean, personally, I only want insurances. I mean, no one really likes the concept of having to pay insurance, but when we need it, we love the fact that we have insurance, right? So you kind of want to position yourself where, okay, if for 20 years, I have this level term policy, then I'm also investing simultaneously. So, I mean, I can definitely share with you guys a slide here that will kind of depict what I'm talking about. Because typically what I teach my clients is, you know, as an investment advisor, you want to be able to have both going for you, investments and insurance, but you don't necessarily need your insurance if you have that money invested. So just giving you an idea here, if I'm in my 40s, let's say, and I have young kids, high debt, a house mortgage, well, God forbid something happens, I don't necessarily want to leave my survivor with that responsibility of having to take care of those bills by themselves, especially, you know, here in the United States, we have 2 breadwinners typically. And let's say someone passes away in the early years, it's not like we start off our family and we have a ton of money saved, right? So usually your savings is pretty low when you first start off your, you know, kind of starting to build your life as a family. But if you fast forward 20 years, I mean, 65, average person typically retires around 65, 67 today in the United States. So if you have grown kids, I mean, hopefully, you know, even if someone has a 1-year-old, a 21-year-old is looked at as an adult here in Texas, right? And so hopefully they're out of the house. That's when you can legally change the locks and you can say, hey, you know, you're on your own. The mortgage is paid off. So at that point in time, if someone's 65 years old and they've, you know, been doing the right things as far as financial principles and putting their money away, they'll get to a point where they're self-insured. Now, the only time they would be really needing insurance is if they haven't invested. So going back to Dawn's point is if you haven't invested and you run out of that 20 years, well, now you're in a position where you have to renew. Okay, so you want to make sure that your company has guaranteed insurability, so they'll still insure you. Like, for example, our company still insures our clients even if their term runs out, for guaranteed insurability up to age 95. Okay, so if that answers your question.
Okay. Any question? Out there in the chat? Any question on the chat?
Well, I do have a question.
Sure.
I mean, from the description of the whole life insurance, it sounds like there are a lot of, I mean, there are relatively high administrative costs that go into it, especially, you know, either in the early years or some the initial years or so. And my question is, it feels like your cash surrender value is, you know, eaten into by a lot of those, you know, costs. Now, my question is, wouldn't it be smarter to just get a term life and then the extra, you know, the additional that I would pay in terms of premiums on whole life, I invest that directly into some of the index funds myself? Because I believe the insurance companies are basically taking my money and investing it out there. I mean, if I'm able to put my money, say, in a Vanguard, maybe index fund, that same premium consistently, wouldn't it be more beneficial to me in the long run, you know, instead of having to pay those administrative costs?
Absolutely, I agree.
Yeah, to add on that also, was this Mr. Kasule? I think so. One of the reasons as to why I switched to Pramerica to get term life was I had whole life. And this whole life, I was paying premiums for both the coverage and I was also saving. I was promised that after a certain time, my savings would have accumulated and I would have so much money. But it was the wrong concept, because when I got a specialist and went to the insurance line by line, by 60, I wouldn't even have money in there as savings, and my policy would have even elapsed or been eaten up by the so many debts I've accumulated. So that's why I also encourage our people to have term life. But it's very good to talk to a specialist and sit down and see what would be the best option for you. But I would recommend a person to have term life but then use those savings that you would have saved in universal or whole life to invest in any kind of like mutual funds, any vehicle that is going to bring you money. As you're investing, you also have your insurance. So if your term life policy expires, you have a whole chunk of money that has accumulated as a result of your savings, which you can use in your retirement. That's what I can advise and answer to that question.
In addition, Mr. Dan?
I agree with that in principle, but the problem is if you're invested in the stock market or mutual funds, we've all seen what happened in 2008 where the stock markets took a huge drop, and some people are still recovering and haven't received back to where they were before that drop. If you happen to be 63, 64 years old, when that drop occurs, you could be without any life insurance and you don't have the investment amount that you need to replace it because the stock market went crazy. It's one of those things that you really have to spend quality time and really have to understand both the benefits and the risk of whatever plan you're putting in place.
Yeah, and I think as far as the stock market goes, the great thing about the stock market is that it does go up and down, because if you really understand how the stock market works, when it does go down, like for example in 2008 when it did go down, actually a lot of people were buying the same stocks at a discount, right? So it kind of depends how you're structured. And so you want to make sure, like I think it was actually Mr. EA, I don't know your name, I'm sorry, but he was actually asking, should I invest in like Vanguard? Well, I mean, they're a great mutual fund company. You just want to make sure that you have the right time horizon. So someone that's 63 or 65 years old shouldn't have been so aggressively investing in equities or only, for example, stocks or, index, maybe investing. Maybe they'd be more better off in like conservative portfolios like municipal bonds or investments that aren't necessarily at high risk. So when 2008 did happen, if they were structured the right way, then they wouldn't have faced that difficulty. The other thing is anyone that lost money in 2008, if they kept their money there and really just let the market do its thing, they would have made it back and then some.
Addition, Mr. Dan?
I have a question.
Go ahead.
Now, I just wanted some light shed on the whole life insurance policies, especially from those who are licensed. Do whole life insurance policies guarantee, especially the investment portion of my premium? Is there any guarantee, especially if there's a collapse in the stock market like what happened in 2008? Of course, I know the death benefit is guaranteed, but is there a guarantee of some kind? Because like Ms. Zera, you had indicated that the rates, could be between 9% to maybe 10, 12%, the return on the investment portion of my premiums. Now, my question is there any form of guarantee, especially if the stock market or many of those investment vehicles go south?
Let me give you an example of it depends on what type of policy you have there. Like I was speaking about indexing. So what indexing tracks the market. So there's a guarantee of a certain percentage of participation in the whatever the gains may be, right? So if, let's say for instance, if the market goes up 15%, then depending on the contract you have, the policy you have with the company, they may say, well, we'll guarantee you up to a cap of 10%, 12%. Anything beyond that, the company will keep, and that's what the policyholder pays, if you would, in terms of the participation and being able to have that security. So, I kind of stay away from just one policy fits all because it's, that wouldn't be true. There are some term policies that are much better than other term policies, given what they offer to the client. There's some whole life policies that suit the customer better. You have what they call now hybrid policies that have a lot of other moving parts than just your normal old, policies in the past. So you can have policies that are linked to the market, but not in the market. Okay. And so, for instance, you can have a certain policy, a term policy that may be, X number of dollars, and then you can get another policy that is less than that, another term policy that's less, or depending on what you're looking to do, you could get an index policy that is, not so much more, but it's doing different things that you deem to be reasonable for what your plans are. So to answer the question, you can have a policy that gives you guarantees. You just have to, as we stated earlier, just look over that policy, sit down, look at it with the agent to make sure that it's covering all the points that you look for. But there's no just one policy fits all. There's no one philosophy fits all. Mutual funds are good, but then you have some index policies that are really good and proven to produce over time. So it really depends on what the client is looking to do and what they're looking to put into that policy to yield the benefits that it does. So,
Mr. Dan, in addition?
Well, we've all been talking about the fact that there are a lot of different uses for insurance. Some of them are to just protect a business or protect a period of time when you've got kids at home and you've got a mortgage and all those types of things. Others are talking about then tying that to an investment portfolio. There's so many different ways. I actually have a company that will sell you term insurance, and if you're still alive at the end of the term, they give you back all your premiums. There's lots of different companies that do lots of different things, and that's exactly why you need to sit down with the professional that you trust and ask those questions and make sure that you really, really understand what's going on and that you review those policies on a regular basis. For people who don't know, September is National Life Insurance Month. This is the month that has been set aside every year that the industry recommends that you call your agent and review your plans. It's important. It's not a buy it one time and forget it type thing. It's a living product.
Zahara, in addition?
Yeah, I mean, I think mathematics is basically, it's not the numbers don't lie. So I'm a numbers person. So I just look at historicals. I look at, what has the stock market averaged since since the beginning of, I have some mutual funds that average since 1943, 10 to 12%. So you kind of have to go based off of just the information that's out there. If you know numbers and mathematics as far as how that works, you're not gonna, you will see what fits best for you as far as a client, as far as your goals with the life insurance, what are you wanting to take care of? And of course, making sure that your community has that protection as well, because ultimately what's better than having, any kind of insurance is better than no insurance. That's personally my opinion and I think the guys can probably agree, is you never want to ever be in a position where you have no life insurance, right? So I think as far as the community goes, making sure that all of the community members have proper life insurance and sit down with, of course, someone that you feel comfortable with, knows your best interest, knows what's your goals. The benefits of just being able to make sure that your community is all covered is making sure that, there's never a time where you're having to collect money and you're never, finding you know, it troublesome to even just bury someone, but it isn't burial life insurance. I mean, life insurance covers a lot of things, like we all covered. And I personally believe that you should always have your own privately owned, so that way you're not tied to just one group or coverage, as far as if someone ever deems that, you know, they aren't going to do that benefit anymore, your family's not suffering for that, right? So that's kind of pretty much, I guess, all I had to add in.
In addition to that, I will also recommend, I know when you are starting this conversation, even when you are brainstorming, some people thought this forum is only for those that don't have insurance. But I want also to recommend to those who have life insurance policies to consult these specialists, to go through your policy, because you never know what you have in there. And as Mr. Don said in the beginning, that sometimes as we issue this policy, we need to visit our people to find out how they are doing. But also, you as a client, you need to visit your policy, your insurer. You need to visit the person that gave you the policy. But the most important thing is get your policy and get someone to look into it. Even if you got it 5 years ago, 10 years ago, maybe things have changed which you don't know. Because guess what? Something is going to happen and they tell you, hey, we increased the premiums. Or your insurance lapsed. Or you didn't make any payments just because maybe you changed bank accounts, or maybe you changed the card number. So all those things work hand in hand. So it's very good. I will recommend all our community leaders. I know we have so many of our community leaders, which are the ones that will be introducing later on from UNA. We have so many UNA officials on this forum, so that they can also take this message to their communities, to always tell their people to get specialists to look through their policies, because it is very, very important. It happened to me. I don't want it to happen to anyone else when it's too late and you maybe spend like 10 years thinking you have a policy, thinking that you have insurance, thinking that you are covered, thinking that your family is covered, yet it is not.
Okay. Now this question is going to go to Mike Mukasa, you being one of the community members. Most of our African communities do not want to buy life insurance. They think it's a luxury. When something happens, that's when we start gathering ourselves to send their bodies back home. How can you advise them to start up a group insurance? And what would be the cost? I know you cannot establish what the cost will be, but what would be the minimum at least, so that everyone can get on the board, buy insurance, pay that minimum payment so that they are covered in any.
Okay, thank you so much, Patrick. And that's a very good question. Now, as a leader, as I mentioned before, and the reason that's why I became an insurance specialist, I do this on a side business and I work with Ms. Zehra. I realized our community needed this, especially the fact that we had had so many deaths in our communities and we are soliciting money using GoFunds. And in my position as one of the community leaders, people are calling me, this person has passed away, hey, we need to set up a GoFund. And right away, I will go to the treasurer, Miss Ime, that Ime, I need you. We need to set up a GoFund. Then I could go to Patrick, I could go to Mr. Badu, I could call Mr. Jimmy, I could call Mr. Mwonge. I'm like, hold on, we shouldn't be doing this. We should educate our people to get life insurance. The good thing, you have Mr. Zehra, you have Mr. Don, and you have Sydney, who are specialists, they're all providers. That's why I said I'm happy of such resources, because it's helping us as leaders, because if so many people get enrolled, guess what? No one will be calling us to start soliciting funds. Now, to switch to how we can apply for a group life insurance, I personally, on a personal basis, I recommend personal or private insurance. But if the community like Houston Ugandan community will have to set up group insurance, we need to look into which companies offer good life group insurance policies. That would be number one. Then we look at the requirements. What requirements are there outside. So, first of all, as Mr. Don explained, you have, in order to get a group, any kind of insurance, you need a social security number, or you need a tax ID. And the people who want to come into the group insurance have these minimum requirements. So, okay, now, if all our people meet those requirements, the basic requirements needed, then you look for a company. And also, as you're looking for the company, we find out the cap, how much do we need? Our people mostly think that getting a death benefit is the most important thing, whereby we're gonna get maybe 30,000 in death benefit compensation, or 50,000. We can go into that, but mostly you need to find out the numbers we have, and also the people that we are bringing on board, do they have substantial income that is going to be able to avail them to pay their premiums monthly? Because even though it's group, these contributions, are they able to contribute? Because you don't want to get a group and some members are not willing to contribute. So then I'll talk to maybe my fellow providers, specialists like Don or Sydney or Zahir, to find out if their companies they are working for offer group, and then we apply. But also to come back now on the private, I would recommend a person to have a private policy, because it is manageable. You can always tweak things around, and you control it. It's in your hands. And guess what? If you want to get a private policy of $30,000, maybe you're going to pay, let's assume, $45 a month, depending on, it also goes back to the age. But either way, the door is out. Now we have the conversation. We can still go back as leaders. If you want to get a group policy, we have people, we have the resources now. We can apply for that. There's no issue with that. But again, I would recommend for somebody to have a private policy for themselves. Thank you so much.
Mr. Dan, in addition?
Yeah, a couple of different things that he was talking about is people not wanting to buy a larger policy because they think it's going to cost them a lot more money. Well, the truth is that the cost per $1,000 of insurance, the more you buy, the cost per 1,000 goes down. It's like buying toilet paper at Randall's versus buying it at Sam's. The cost per roll when you buy 48 of them is way less than when you buy it in 1 or 2s. Life insurance is the exact same way. The other thing that you always have the possibility with life insurance is an agent can say, okay, you don't have a specific amount that you want to buy, and you only have this much money in your budget each month right now to be able to buy that life insurance. They can take that amount of insurance, or that amount of premium, and calculate how much insurance that will buy. There are other pieces that as you're getting older and your finances are getting better, some insurance policies give you the right, guaranteed, to buy additional amounts of life insurance at standard rates. You don't have to worry about whether you're insurable or not. And so you can activate those. They're called riders. They ride along on your insurance policy. You can activate those and buy additional insurance without the possibility of being turned down. There are so many moving parts to putting together a good life insurance plan. And we've been kicking around a lot of things. And one of the things I want to say is that let's not forget about children. When I first got into this business, I wasn't all that important to insure children. It was my problem because I didn't see it as being a benefit. I saw it as a very low commission for me, and I didn't want to spend my time doing that. Well, then one of my clients had a son who ran out in front of a car, and he was killed. And I went to that child's funeral. Back in those days, there weren't any group funding programs on the internet. So this family was standing at the cemetery with an empty Kentucky Fried Chicken basket that they had laid a piece of paper around saying, please help us pay for our son's funeral. And that told me right then, I had to change my thoughts about insuring children. It is the best time of all times to buy life insurance is on children. The amount that you can get for the smallest amount of premium is amazing. I just wrote a policy last week on a 8-year-old. They're spending $40 a month, and it's $100,000 worth of life insurance on that 8-year-old. They'll spend $40 a month the rest of their life. It'll never go up. They always have that $100,000 worth of life insurance. So it's really advantageous when you're talking to that family to put together a whole plan. You can also do some things as professionals. We can also help you find ways to come up with those premium dollars. A couple of months ago, I was working with a client who just swore up and down that he just didn't have enough money to be buying life insurance. But I noticed by looking around his house that he had empty Starbucks coffee cups all over the place. And I asked him, how many times a day did he go to Starbucks? And he said 3. And I asked him, what is the average cost of that coffee that you're buying? And he said, on average, it's about $8. So we sat down and calculated if he left 1 cup of coffee at Starbucks and didn't buy it, he'd have $8 a day. That's $40 a week, or $150 to $160 a month that he could very easily put into a life insurance plan and protect his family. And all he's doing is giving up 1 cup of high-priced coffee. So there are ways that we can show people how to be able to work life insurance into their budget. And Mike was right. It's important that you buy enough life insurance to provide the protection that your family needs, and not concentrate so much on what's the bare minimum I can get by with. Life insurance is an important part of being a family. As workers in a family, breadwinners in a family, it's our basic responsibility to take care of that family. We take that commitment on when we buy the cars and the houses, and we sign up for the cable and the internets and all those types of things. What we're saying is these are more important than providing for my family if something happens to me. And I don't think anybody really believes that. They really think their family is the most important part of what they need to do. Sorry, got a little run on there.
Mr. Patrick.
Yes, sir.
Also, something I forgot. I always tell my people in the community, we all have mobile phones. You'll be very surprised. People have insurance on these mobile gadgets, but they don't have insurance on their lives. That is scary. So I tell people not to get scared, but to apply and get policy. Even if it's a small policy, it is still covering you. But as long as if you don't get it today, when you wait for tomorrow, the years, time is running and things change abruptly. So which means the premiums go high. Mr. Don was mentioning the cable. We have cable, we have so many luxuries, but then we are not taking care of our families because we don't buy policies. We're not protecting our families, and we're paying for all these bills that are going away, but they're not coming back to us. It is one thing that we have to really give an eye into. Thank you.
Yeah, but just an addition. Back to our community. Our community, as to grows older, they may have had insurance when they were younger, but as they grow older, they tend to neglect it. That's why we should try very hard to at least have something like group insurance, because the older ones forget, and once they pass out, it's a problem to those who are living. if we can get insurance maybe for just $20,000, $30,000, just to take their body back home. That's what I would ask. I'd ask you guys who are in the insurance business to help.
That sounds good, and I understand that they want to send their body back home. But is their family going to move back home with them? Or are they going to continue to stay here? And do they want to stay in their same house, drive their same car, put their kids through the same college? If they're going to do all those things and not move back, they're going to need to revamp what they're looking for in the way of life insurance to recover the costs or the monies that person was bringing into the family. It's all about a plan that you want to put in place that's going to work for your family's needs. So it's the most important thing is sit down with a good professional, and please don't be afraid to tell them everything about your family. We are in an ethical situation where under certain laws, we cannot not divulge any information that we pick up. It's against the law to do that. And we can end up with serious fines and in some cases jail time. So be honest with your professional. Explain to them what you really want. And then when they talk to you, listen very carefully to what they're recommending. Because in most cases, a good professional insurance agent is more concerned about your family than what commission they're going to be making. If they're not, you need to find a new professional because that person's not going to be around a while. Most life insurance agents take at least 5 years before they're making enough money to do it full time. So if you've got somebody who's only been in the business a year or two and doesn't have some way to support themselves, in addition to the life insurance, they're probably not going to be around in a couple of years. So choose wisely as to who you're going to work with, and then work with that person with all the information that you can provide for them.
Okay, another question. If you buy life insurance, who's the best person you would put as a beneficiary? Is it your spouse, your child, your neighbor, your brother, whatever?
Well, that's a good question. I've heard a lot of people being afraid that their spouse would kill them and all these things. But the first person they suspect always for murder is the beneficiary on a life insurance policy. So don't worry, they will get caught. But one thing I did want to say is, of course, we're just joking, but you do want to make sure that this is the person that is going to take care of your family. I would also make sure that person is over 18. You don't want to put a child that we question giving our kids even $20 or $50 and we're like, what did you do with the rest of it, right? So when's the last time you ever gave them $250,000 or $100,000, and then, of course, like Don was mentioning, you do want to make sure that your kids are all covered inside your policy as well. Typically because they're not breadwinners, we recommend at least funeral and final expenses. But you also, what you're able to do is you can put down in your will, like Mike was mentioning earlier, you can put down in your will if, let's say, you don't have someone over 18, and you can legally actually name someone a guardian or as far as a trust for those children. So that way that there's a person that can manage those funds, and you can actually have them prove that they're making sure that they're taking care of your family. If you don't have that person that's over 18 or a spouse, or maybe you're in a different situation.
In addition to that, Mr. Mukasa?
Yes, I have some addition to that. And I have a very sad story. This goes to updating your policy information for those who get divorced. But maybe if you divorce or if you get a spouse, immediately you need to change your beneficiary. I was in a service and a Navy SEAL got divorced with a wife. When he divorced, after a couple of months, he got married to a brand new bride.
About that.
When he got married, after getting married, 2 weeks, he got deployed to Afghanistan. But when he submitted his paperwork but he didn't submit his paperwork to the authorities to change the beneficiary. Remember, as military, we have $400,000 as compensation. So when he went to Afghanistan, he got killed. So when he got killed, the wife, the new bride, went to claim. But guess what who was on the paperwork? The wife that he had divorced. Guess what? She didn't get any money, even though she was the legally married wife, but because he had not changed it in the system. So it's very good to make sure your beneficiary or your insurance is up to date. It's up to date, your kids are in, your wife is in, and whoever you want to be on the policy and the share. Some people share them that, okay, I want my wife to get this, I want my kids to have this. It's always very good to update that. But also, it's also very good, for those who don't know, Primerica offers wills. They help people to do their wills. It's very good for us leaders to tell our community members to have wills, to go through their right attorneys to process them a will, but then also get a provider who can do that. But it's very, very important. The will goes back into who's your beneficiary and how updated your information is. Thank you.
There's also the possibility that you don't necessarily have to name a person as a beneficiary. I have clients who leave money to churches. They could leave it to community centers. They can leave it to schools. They can leave it to whomever they want. One of the things that is very, very important when you name a beneficiary, but particularly with a woman beneficiary, my goodness, get their social security number, because they may have changed their names once or twice, and we can't find them without the social security number because they've changed their driver's license. If they move out of state, the driver's license is different. In the state of Texas right now, there is over $1 billion with a B dollars sitting in a state fund because insurance companies can't find the beneficiaries. And there's no way to turn the money over. It just sits there. And unlike other funds where after 5 or 8 years, the state will take those monies from savings accounts or whatever else, they can't do that with life insurance because it's a contract. And that contract never expires until all parts of the contract have been fulfilled. And part of that contract is paying the funds to the beneficiary. So please, please keep your stuff, your beneficiaries updated, and always name a primary and a secondary, what's called a contingent beneficiary. Because we've all seen somebody where the husband and wife are both killed in a car accident. And if they have not named a contingent, that's one of the few times that life insurance will become part of somebody's estate, and a probate court will decide who gets that life insurance, is when you don't have a named beneficiary. So please, we keep talking about all the time about the fact that you have got to keep your plans updated. I recommend at least every 2 years, or if you've had a major change, a birth, a divorce, you bought a house, you've gotten married, you sent a kid off to college, you bought a business. Any of those types of life changes should trigger you to review your life insurance plan with your professional. It's just extremely important. It may be more important than the original purchase, because you could end up not having that plan do what you wanted it to do. And that's a shame, because it's just a matter of keeping the paperwork up to date.
In addition, Ms. Zahara?
I was going to say, Patrick, that actually, I know a lot of people have asked questions about the group insurance. You can actually even, there are some companies that what they'll do is they'll give the, every member of the church or community a discounted rate based on coming through, let's say this seminar, or for example, if you guys say, hey, this is the discounted rate for Houston, the Houston community of Uganda, and what they can do is they can buy a policy, like Don was saying, at a much discounted rate because of that, because coming in through with that company. And there are some companies that allow you to actually own that policy personally, but still be able to have that discounted rate, right? So that was, I know, a question that was mentioned earlier, but I don't think that we mentioned that as well.
That's good. And in addition to that, I guess you guys talked about if you do not have a social security, you can always apply for a tax ID. So in our community, or in African communities, because we are all immigrants, some people come here and they stay on the law because they don't have any of that. So if you guys could advise them, hey, buy insurance, say, oh, I don't have anything. Then tell them, you know what, applying for a tax ID does not cost you anything. Just apply, it's given to you there and then. It does not take 2, 3, 4 days. No, once you go online, you apply, they'll give you one. Then you use that so that we can have some life insurance to the community.
Some companies will take it's a TIN, a tax ID number. Some companies will use it, some won't. Some companies only take social security numbers. Some are very, very more open about what they do, and they will take social security numbers, they will take green card numbers, and they will take the TIN numbers. It just depends on what you've got and which company they need to put your insurance with, based on what those companies require.
Yeah, and you can definitely apply as long as you're paying taxes. You want to be able to, and let's say you haven't filed your taxes, you can go definitely to H&R Block. That's just a very standard one that people use, and it's pretty simple. You can definitely go in and get one. But I would definitely recommend that they have some form of identification, just because you want them to be able to identify you, and plus being in the community and being in the United States, you should have some form of documentation just to help you as far as settling down, putting down some roots. But that's a whole nother topic.
Okay. The other question is, would you advise someone to buy life insurance for $500,000 or $1 million?
I personally
go ahead.
Go ahead. I personally own almost $2 million worth.
I think insurance depends on the need. So for example, I look at, if a person has a mortgage, if they have young kids, there's a formula, if any of you want to write it down, it's called DIME. And it's typically a good way to assess someone's insurance needs. Typically, most advisors say it's 8 to 10 times what that person annually makes. But if you want more of a concrete number, you could look at the DIME principle, which covers any debt that they may have, such as credit card debt, student loans, things of that nature that you don't want falling on your loved ones or survivors. Death, such as funeral and final expenses, range between 20 to 30,000, just bare minimum. Income for your survivors. So if, let's say, someone has a spouse or children that are definitely dependent on their income, you want to make sure that that income is still coming in to suffice or make up for that difference that's no longer there until the youngest child. Typically what we recommend is until the youngest child turns 18 a mortgage cost, and of course, education costs. So that's kind of what I look at, is those 4 areas. I don't think that, you need to overinsure someone or underinsure them, but it just kind of depends. I'm sure Don has, 2 million because there's, he's a very valuable guy, right? So, I definitely.
Kids, 4 grandkids, so it's a matter of transferring wealth to my family. I can afford it. I did it, so I'm going to do it with 4 children and grandchildren. It's just a good way to do it. For me, it's a nice estate to leave behind. It's part of the plan that I put in place a long time ago.
Mr. Sidney, in addition?
Yeah, they hit on it. Like Don said, the reason why he does so much, and because of leaving on a legacy for the family. And like Zara said, you want to make sure that you have enough to cover the expenses. So after that breadwinner leaves, then in the grieving period, they don't also have to be wondering how they're going to take care of the day-to-day necessities, the mortgage, whatever other bills they may have. So if you're able to really make sure that the heirs and the beneficiaries in a better position, there's no reason not to if you're able to do it. So,
Mr. Patrick, there's a hand. Josh raised his hand.
Say that, but he's raising up his hand. Yes, Mr. Joshua Kisuli. Any question? You're welcome.
Thank you guys for everything. Thank you for this conversation. It's long overdue. It's more of a hypothetical question, and I know there's no one blanket fits all. But if you're looking at an older aged community, or a community that has a bracket of older community members that don't have life insurance, do you have any, like, on a sliding scale, like just average policy premiums, let's say from 50, 60, 70? And again, I'm not asking for hard numbers, but just from your experience writing policies, from clients you could have assisted within those age brackets, just to have a kind of a feeling for some of the community members out there who might be thinking about picking up policies but don't have those policies. Just average raw numbers, how much it could cost, the coverage, and again, it's just a hypothetical question, but just throwing it out there, see if there's any light that could come out of it. Thank you.
Can you answer that?
Yes. Josh, before you go, which age are you looking at? 50 and above, 55 or 60?
50 and above.
Okay.
And maybe you know what the cutoff numbers are, or where the the premiums start acting up. You can start from that number.
I'll be brief before the other specialists come in, because I think me and Zahara 2 weeks ago we had to help one of our clients who are in the same age bracket. 50 and 55, between 55, you are looking at something like 130 if the policy is going to be for, Zahara, was it for 50,000 or 30,000? One of the two.
It depends. I know that she also had, it was maybe based on complications, but it depends. If you're looking for, like, I know your main concern is funeral and final expenses, so you might not need like 100,000 and 50,000 like we were quoting her, but what you'd probably look at is funeral and final. So I would say range between $80 to $100. It just depends. If they're, just normal 60-year-old, they haven't been hospitalized recently. Again, like we said, it depends on someone's health, but that's kind of a number I would feel comfortable to tell you, because for funeral and final expenses, it's, really 20 to 30,000, just depends on the client and their immediate need.
Also, we should be reminded that the term will go to, it has to go to 75, I guess. They can't go beyond,
They can go up to age 95.
but the system allows you to 75, but then
Yeah.
they can just increase.
Yes.
So Dan,
The situation with doing the numbers, when you get to the age of 50, pretty much every 5 years, the break on premium goes up to where a 50-year-old man with $25,000 policy, maybe $75 a month. When you get to be 55, it may be as a little more than 100. And by the time you get to 65 or 70, you could be talking $200 a month for a $25,000 policy. And that is where you get into the situation of it being somewhat cost prohibitive. It's one of those things when you really wish that you'd have gotten to that person when they were a little younger. It is available. There are some plans that, like we've all talked about, called final expense plans. They can be a little less expensive if you do a plan that allows you to build the value. So the first year it might be worth only $6,000. Second year it might be worth 12, and at the end of the third year, then it's the full 25,000, and the premium stays the same for that whole period of time. But if you pass in the first 2 or 3 years, you're going to get a lot less than the face amount of the policy. That may be the only option that the people will have available to them based on circumstances and health. It's a real difficult thing to just say, here's what it's going to cost, because ages are not the only important factor. Health reasons, health and background stuff. You run into people all the time when you ask them, what medications do they take and are they healthy? I asked a lady a month or so ago, how her health was, and she said, oh, it's really good. And I said, do you take any medications? And she pulled out a shoebox with 20 some different medications in it. But as long as she took the medication, she considered herself healthy. Well, I can tell you what, I don't know of an insurance company out there that'll take somebody who's taking that much medication. So it's all a relative thing. The basic key is I think probably all of us in a situation like that could send a trial application. You send it up to the underwriters and say, what can we do for this person? And then they will send back a premium amount, whether it's a policy that they're going to rate up and charge more premium, or whether they won't take the full amount of the face amount. But they will they may also just totally reject you. But it is possible to do that trial to see what is available with different companies. It's very difficult to get life insurance when you really hit into that 60-year-old basis. It gets very difficult.
okay, I guess we are coming to a conclusion, and I'll need everyone to give in their last word.
Mr. Patrick, before we go into that, can you allow me, because I have other UNA representatives who joined this forum.
Okay.
They are representing Ugandans in different communities here in the United States.
Okay.
Can you give them a few minutes just to introduce themselves and where they're coming from?
That's
so that
fine.
maybe they can invite us to attend their communities to help their communities with such knowledge, please.
Okay.
Okay, thank you so much. I'm going to invite the Speaker of the UNA Council, Madame Maureen Kalemba, to introduce herself.
Thank you so much for having me on your conference and inviting us. I'm in the Boston area. We call our region New England. I'm very humbled to be part of the team that is listening to insurance. I have that as one of my main goals in my manifesto. I have a person right now in hospital and he doesn't have insurance, and it's so bad and sad that he can't go through the medical screening because he has something concerning with his heart and the pacemaker and EDC. So when I was hearing your questions, I was like, I wish our community members adhere to these causes right, from the get-go, and we would not have to come through this. I'm glad to hear the business side of it too, where you can really derive a lot of income out of it. And I'm very privileged to have Mr. Mukasa invite me and other council members join, and we hope to improve our communities with having more of such forums. I would love to share with me the recording so that I can have it as a training in my New England area. Otherwise, thank you so much, and thank you for having us, and thank you for giving us that knowledge and passing it on to the last man standing in the community. Much appreciated.
Thank you.
Thank you.
Can we have the Deputy Speaker of the UNA Council, Mr. Albert Bakasera?
Thank you, Mr. Secretary. Thank you so much. Thank you for the good work and the service that you guys are providing to your community. This is a very, very important subject, and it's very near and dear to my heart. Because I'm also the chairman of Toro American Association, another Ugandan diaspora organization here based in the Washington, D.C. area. Every quarterly meeting, we sit and talk about life insurance because it's important, and our people do not think so. Almost every week, you find us fundraising for Ugandan who's lost their lives, and then we have to take their bodies back home. But I always tell my community that does not really solve anything, because life insurance, as we all know, I mean, you guys are in the industry, you know, it's not for the dead, it's actually for the living. I mean, yes, we can collect money and take your body, your remains back home, but then who pays for the next month rent on your apartment? Who even ships your belongings? Who takes care of your mother back home? Who takes care of your widow, your kids, the education, the mortgage? This is what our people do not appreciate. So when I see something like this, and of course I've been in the background listening, I've put on the same programs in my community. I have 2 or 3 people that are on our community forum that keep begging our members, our community members to enroll in life insurance and the other services that you guys provide. I don't know, and I've listened and I've had a few suggestions, and I'll take those into my community to see maybe that will do it, and we can keep having these forums, and maybe ask you guys to join our people here and put on a big show like we did for immigration today. Maybe they need to hear it more times and from different presenters. I don't know what it is, but yes. So when I see something like this, I'm really, really so glad. And I appreciate everyone who has volunteered their time to provide this service to the community. Keep it up. Mike, thank you so much for the opportunity to put in a word. But yes, this is something that is so important to our community. And I really, really appreciate you. And I'm grateful that you've collected these wonderful people to give their time to our community. Thank you.
Thank you so much, Mr. Bakasera. Gonna have the Vice President for UNAP, Ms. Lydia Natoro, please.
Thank you so much, Mr. Secretary, for our UNA Council. My name is Lydia Natolo. I reside in Irvine, not Irvine in Texas, but Irvine in California, right here in Orange County. I'm so grateful and blessed to be part of this conversation and dialogue. Thank you, everyone, all the panelists. I started a while ago, but I had to get off and run to work, but I had to get back on after I settled in. So I just want to thank you for what you're doing for our community. And I want to extend a hand of partnership. As the vice president, my main office actually is more to look out for UNA advancement and development, but also look for partnership, for resources to enable our people live a better life. What the discussion you have here today is so vital for our people. It's important. We need it. So please, let us work with our secretary. We are here to partner with you. We want to know how we can do to make sure that the dialogue here actually comes into fruition. And I'm so blessed to be part of this conversation today. So thank you so much. And without further ado, I'll be able to connect with our the Secretary of the Council, Mr. Mike Mukasa, so that we can further this conversation to make sure that the resources can get to our people. We have almost more than 150,000 Ugandans in the diaspora. That is USA and Canada incorporated. But there's so many of those we don't know. So we have a huge market where we can be able to deliver these resources to our people, and vital resources and urgent resources. Right here during the COVID time, we've lost more than 10 Ugandan members, more than 10, just through the past couple months. And most of them, almost 70% of that populace, had no life insurance, had nothing. So this would have been a vital conversation we would have had about 4 years ago, whereby it's okay for us, as we know a phrase that goes, proverb that goes, we are village, Africans, we live in village. It's a village that literally raises a child. But we need to rethink beyond that. And what you're doing is to help us be able to rethink beyond just being a village by bringing resources. So thank you. And I'm so honored. Thank you, our secretary, Mr. Mike Mukasa, for hosting this and bringing such resources to our community. So we're here to partner with you. I'm so blessed to be here. Thank you.
Thank you so much, Madam Vice President. And lastly, we have Madam Josephine Matovu Mugaga from Chicago.
Hello.
Hello.
Yes. Thank you, Mr. Mukasa, for necessitating this forum. Life insurance is very important in the light of all the members we are losing almost each month. There is a Ugandan who dies in the different 50 states that we have. And like my predecessors mentioned, we have the duty of fundraising the money so that they can be buried. I know the life insurance is more for the living than the dead, but when we are stuck with this, we are obligated to respond in kind to ensure that our people get a decent burial back home. So this information is very important, and I would like Mr. Mukasa to share it with different people, the different states, so that we can have all this information available to our people. We shall keep talking. Our people don't want to hear about death, but it's the reality. We will keep talking and talk and talk and talk, and somehow something will give. But thank you so much for presenting all this information, and we hope to hear from you again. Have a blessed day. Bye-bye.
Thank you so much, Councillor Josephine. To mention, Councillor Josephine is from Chicago, and right now they are soliciting money because there's a Ugandan who died just a few days ago, a young Ugandan, he just passed away. So right now they are trying to solicit funds to see how to take the body back home. So you see how life insurance affects all of us. So as leaders, it's our duty to educate and get people like these specialists to come and speak to us, and we have to preach the message and make sure many of our people get enrolled. Thank you so much, Mr. Moderator, for giving me the chance to introduce my people, my fellow leaders. Thank you.
Any question so far? Anyone with a question? Okay. Okay, back to our session. Now we are trying to wrap up what we've been discussing, and I would like for Mr. Sidin, yes, Mr. Kisuli.
Hi, sorry to come back in. I just wanted to, if I could just communicate to the UNA leadership. We have the numbers. I think the speaker said that we have like to the tune of 150,000 Ugandans. I've seen small business companies, you know, negotiate premiums in terms of insurance, health insurance, and all that, based on smaller numbers, and they've been able to get good premiums for their clients, for their employees. So I just want to implore the leadership to, you know, exploit this opportunity and see if there's anything it can do to leverage these numbers, because there's power in numbers. And also something was said that we keep on referring to our people, we keep on preaching to our people about life insurance, we keep on doing this to our people. But I think we have to change our messaging. It could be in our messaging. It could be a reason why this life insurance conversation never cuts across. If we keep on using the same template, if I could use that, in communicating what we think about life insurance, then it could be a steady conversation, and today will come and pass and just be archived as well. So let's find creative ways of drilling down this message, more creative ways that will attract people. By all means, by all reason, life insurance can be a sellable asset. You guys are out in the market, you sell this to willing buyers. So if we need to tailor this message to soluble bits and parts so that our community can better understand it. So I'd rather we refrain from using the same connotation of our people. We keep on selling the same message that doesn't stick with them. So I just wanted to share that to the UNA leadership. If there's any ways you could find leveraging those numbers, being more creative. This is a very good platform. So bring in experts, you know, just working on the messaging part of it. I believe we'll see a turnaround. Thank you.
Josh, to answer your question, I think, okay, Madam Lydian, the Vice President wants to answer your idea.
Sorry. Thank you so much. Thank you so much for that really great question. I wanted to actually just an addition to what you're saying. One of the efforts I am about to bring into our leadership, you have members, and grateful for you to say, let us change the narrative. We are a culture, I think when it comes to death, we don't think about death. So this is the work for you here, panelists. How can you be able to deliver? I have an ask and an answer to what you asked. How can you be able to deliver life insurance to a community of people who don't even think about life after death? And I'm so grateful that you said this is not about the person, but rather the family they're leaving behind or their friends. The thing is, I wanted to tap into the youth, because we all know some of the insurance policies, they look somebody, I work in the medical industry, they look somebody's health. How can you also tap that into the conversation you're bringing here today? So this is just more a suggestion to all of you. How can we tap into the youth? We have a big number of our youth in diaspora who don't even think about that, because you know they're young, they don't even think about death. So how can we create a platform for them to realize that they need to start investing in their life after death for the sake of their family, for the sake of their friends, for the sake of their, you know, people around them. And the other thing is, as I said, this is an extension of a hand as a UNA leader. We are here to work alongside you. We're here to hear you out. Let us create a contract or a business plan that we can partner with and see how we can send it to our community members and see that everyone is actually on a safer side of the other side of the story. So those are the three things I wanted to share through your ask. But thank you.
Also, Josh, I want to let you know that the Council of the UNA is working on a plan to have like a group insurance for all the Ugandans in North America. I want to, Mr. Moderator, can you give me 1 minute to invite the Speaker of the Council to speak about that program, because I think it's very interesting and answers Josh's question.
That's fine.
Okay,
Thank you so
Madam
much.
Speaker.
Thank you so much, Mr. Secretary and Mr. Josh and the moderator and everybody at large. We have a community emergency fund which we are creating. This emergency fund, we just have to give a fee into every Ugandan who comes, gives a fee, whether you have social security number, whether you're sick, whether, so that we have you already in a pool. And so that pool is based on numbers. And when we are done and we find that we have a problem with that person who has been, it's like life insurance, but this time it's in a pool. That person has been a good member, there's annual fees. And in that year, he has been paying up his annual fees, whatever years it takes. Then we can contribute to his day and the remains to ship back most of his property, and also to give some money to the loved ones. That way, everything is catered for and it's not a pinch onto the community. Right now, the community is facing a pinch because we don't have such a community emergency fund in place. So now we in the council, we have introduced it, and we're gonna make sure that it moves to every Ugandan everywhere who cannot qualify for your life insurance and can qualify for our group emergency fund. Because there's those ones who are still transitioning and they do not have a green card, they do not have status, and they're here and they die. What do? We're the ones to get the pinch because we're the ones with the legal status. So for us, we are including all walks of life into this community emergency fund. And this emergency fund is going to help facilitate in that time of need, that person. We're looking at also people with terminal illnesses. We're also looking at those who are falling out of employment, but we're going to start first with the deaths, and then terminal illnesses, and then go into the employment and accidents. So we are really in there, but we are fishing into those arenas where there is gray areas and people cannot qualify. That is where the community emergency fund is going to come in to help out on our people from the diaspora who are facing such challenges and cannot jump the loop, in case you've been here for years and you have never been given permanent residence, or you have been denied, but you're still in the United States. Something befell can happen to you. What are we gonna do about it? That's where we come in with our community emergency fund to make sure that Ugandan anywhere does not face a time where he cannot be taken back home, or where he cannot be his funeral arrangements cannot be taken care of, or where his family and his property cannot be shipped wherever they want to be shipped, and given some money to start afresh in case the inevitable happens. So thank you so much. We are on point. I think we're looking into that. It's kicking off this financial year. So we hope that we will reach the common man and the common goal and cover every person. Thank you so much.
Thanks very much. Mr. Kisuli.
Thank you, guys. Yes, Patrick.
Yeah, go ahead.
No. I just wanted to say thank you to all the contribution. I'm encouraged that there's work being done in the in the background. So yeah, like she said, let's look forward to what's to happen in the future, and yeah, let's just keep the conversation going.
Okay, we are coming to a conclusion. They are crying. There have been 2 hours. So I'll give the last word to the participants. I will start with Mr. Sidney Davis. There's 3 minutes to conclude.
Well, I just hope that the information has been helpful. Want to encourage everyone not to you know, so to speak, shy away from having the conversation. It doesn't have to be anything that's overwhelming to a particular client. Situation can always be adjusted to that individual as it relates to the premiums and things of that nature, so that they have something in place for, as has been spoken about, the living as well as when they pass on. So reach out to a professional and let someone assist you. So.
Mr. Mike Mukasa. Mr. Mike.
Unmute.
Okay.
I want to thank the panelists for honoring the invitation. And I want to thank you for giving in your time to volunteer to help our communities. I want to thank the leaders, my fellow leaders in the Houston Ugandan community. Thank you so much for putting up this event. I want to urge you, our fellow community members, to enroll, to get policies, to do some research, to inquire from other people also, and also to learn from other people. Learning is a way of avoiding getting to the same problems that other people face. We've seen other people passing away and their families are left behind and they are not covered. So I don't think as a community, as we who are still living, would want to see our communities or our family members left out in a disarray whereby they don't have money for mortgage, the kids don't have anything prepared for them for college. So I would urge you, my community members, to get in touch with these professionals on this forum for advice and consultation on how and when to enroll. But it would be very good to enroll as soon as possible because time is running out. As you delay, we are growing and maybe the bodies are also growing. Things that you used to do, you can no longer do them. So those are sometimes called risks when you are applying for insurance. But again, I want to thank all the participants and all the followers for have been able to view and to give in inputs. I also want to thank my fellow UNA leaders for turning up and for their contributions. Thank you so very much.
Patrick.
Hello. Hello.
Yeah, we can hear you.
We hear you.
Yeah, we are back. I don't know what's happening with this thing.
We hear you.
You hear me?
Yeah.
Okay. Next is Mrs. Zahra. Conclude.
Yes, I just want to say thank you for having me on. I definitely, as well as, just getting a chance to hear from you guys, your questions, they're all very valuable. And I hope that we were able to help answer any of those questions. Definitely, if you have some more, if you think about it later on, definitely you can feel comfortable enough to reach out, I'm sure, to any of us. But definitely it was my pleasure. And I hope that we're able to help your families get the right protection you need, as well as, help you invest for the future and help you really get on track for your goals and dreams. So it was a pleasure and thank you for having me.
Okay, next is Mr. Dan.
Thank you. I also want to say thank you for allowing me to participate in this forum. I've worked with other national countries, and the people from them. And I just want to assure you, you're not facing anything different that most other countries have faced for the people who come to the United States from areas where life insurance is not a big prevalent thing. Life insurance can be very difficult to understand. And that's why professionals like on the panel tonight are here to answer questions, to meet with you one-on-one, to sit down and explain and answer all your questions. Again, please feel free to call one of us so that we can sit down and explain to you all your options and get things started so you can protect your family.
Any question before we close? Any question?
Yeah, I would
Okay.
like to say thank you so much, Mr. Moderator, and thank you, the panelists. We're so glad that you are here. It was very impacting. And we hope our community has picked something from it. I know they have had a number of these discussions for some time, but we believe this one here was exemplary. There's a lot of information that has gone out that I believe it will change the trend of things. And we are hoping that this will be the turning point. So any of you just wait for some of the calls that will be coming, and please accept them. Accept our people when they call you. Please pick up their phone and please advise them accordingly. We are so glad that you are able to participate with us. So thank you on behalf of the committee, the Houston committee. We would like to say thank you so much. And please come on when we call you. Please come on. Like Micah said, they are coordinating with the other communities, so they might have a community. The Chicago community might start discussing this, and so we'll need your help. So please, whenever we call on you, please come on. Other than that, thank you so much, and have a great time.
Hold on, Mr. Kara. I also want to remind the Ugandan community that this weekend is Labor Day weekend. So the UNA convention is still going on. So as we turn off from this forum, there's gonna be other forums on the UNA page. There's an after party that is gonna come up. There's a Senga session for those that want to know about the Senga. So please, the UNA convention is going on, and so we'll also be on tomorrow. Thank you.
Okay, let me also do a conclusion. Like I said, my name's Patrick Wandera. I'm from Texas. I work for Homes and Homelanders. I'm a mortgage broker and a real estate consultant. All of you who are on the panel are welcome. Come to Texas. We have a lot of land, big homes. You can't finish it. You are all welcome to Texas. Thank you.
Thank you, Mr. Patrick.
Thanks.
Hey, that's Pastor Lydia.
Oh, Pastor Lydia.
Okay.
Yes, I want to thank everybody for your contributions. That's it was very touching and interesting. I had a question, but it passed me, so maybe next time.
You can ask it. What's the question?
My question about the insurance already closed, so.
They are still listening.
I wasn't there before, but I don't know if they really gave their, if somebody wants to meet someone, one of the panelists, how do we get them?
Oh, they should put their numbers. I guess, hello, are you guys still there?
Yes.
Yeah, there's a question here. Madam wants to meet one of you guys.
She already has my contact. She's good. I'm just kidding.
Okay.
I was going to say, I think Jimmy has all of our contacts, so he could distribute it out to all the community, and we'll be happy to visit with any of them.
All right.
Mr. Patrick, don't forget, we want to thank Kaya, who's doing the technical things for putting up this show. It may look easy, but it's not. But it's one person you don't recognize because you don't see his face. So Mr. Kaya, thank you so very much. We appreciate all your work to the community. May God continue to bless you.
Welcome.
Mr. Kaya, are you there? Can you put your face on the screen so that people can see you?
That's me.
Okay, that's Mr.
In the
Kaya
darkness.
right there. That's Mr. Kaya right there.
All right.
The technician.
All right.
Bye.
Okay.
Happy Labor Day. Happy Labor Day weekend.
Happy Labor Day to you. Thank you.
Thank you, Mr. Bon.
Happy Labor Day, everybody.
Bye, Mr. Chairman. We didn't hear you speaking.
And now you make an announcement. We're inviting everybody tomorrow for our service.